The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing today? Welcome here to the Diagnostic Trading Hour. I am your host, Darrell Martin. If you have any questions, feel free to give me a call at 877-927-6648. And as always, we like to go over where the market is and what's going on in the market. So let me go ahead and pull that up for you right now. Also, let me go ahead and post today's deviation levels so you can check those out and see what all is going on in the market. So I'll go ahead and post those on the screen. So if you're on Tiger TV right now, if you're inside of the Tiger's Den, you can check that out and see the deviation levels for the day on the major futures and forex that we currently follow right here on the Diagnostic Trading Hour. Now, of course, if you have any questions about futures, forex, even stocks and options, you can always feel free to give a call in. Of course, I'm usually talking about the major markets on Nadex. And if you don't have a Nadex account, make sure you hop on over to TFNN.com. Click on the Nadex banner on the right side of the page and click on either one of two things. Either one, create an account, and from start to funded, it's only $100, and you can go ahead and fund that account. It's only $100 to fund an account, and you click start, and it takes about 5 minutes to get done, okay? So it's very, very fast. Also at the bottom under our products, or if you just click on our products at the top, then you'll see a link that says demo account. And it takes about 15 seconds to get a demo account, and you can log in. They'll give you $25,000 of fund money, and a demo account is the best way to learn how to take advantage of Nadex. And if you want to know how to get that demo account extended, just let me know. You can email me at dmartin@tfnn.com, and I'll be glad to help you out. But it's pretty simple. Just email dan.cook@nadex.com. Once you've funded your account, he can give you a solid year on top of that 2-week free demo they give you right there. But go ahead and sign up for that and check out exactly how it works. Now, let's go ahead and do a market wrap and talk about where everything is at in the market right now. Market sort of opened up slow and quiet and then picked up a bit. We got the S&P up 12.25 points right now. We got the Russell up 6. We got the NASDAQ up 17.5, and the Dow's up 111 points. So nice big move right there on the Dow. Looking over at copper, we got the copper is down 0.004, which is just a 0.11% move. So not a big move on copper right there. We got gold up 22 points, just flying up right now. It's a 1.25% move. Silver is just off the charts, up 0.919. That's a 2.75% move right now on silver over Friday's close. And looking over at natural gas, we got natural gas looking like it's down right now, 0.133, which is a 3.6 move. So we're just seeing some big moves in the commodities right now. We got oil down 91 cents. That's a 1% move. And we looking over at the agriculturals, we got corn is down 13.75. That's almost a 2% drop in corn, and a 29-point drop, nearly a 2% drop in soybeans as well. Looking over at our currencies, we got some currencies. I mean, we got euro dollar, it's down just a little bit, 16 pips. Aussie dollar up 17. Pound dollar down 8. We got U.S. franc up 12. U.S. Canadian down 11. And U.S. yen is up 30 pips on the day. So as you can see, as I've already shown you there, we got some heavy commodities moving like crazy. Corn, copper, silver, soybeans. I mean, on down the list right there, just moving like crazy. So there's a lot of action. That's one of the great things about trading on Nadex is they have a wide range of markets. And on their range of markets, you can go in there and you can trade stock indices, forex, and commodities all in the exact same account, all with 100% defined risk. So you have defined risk trading. I mean, if I put up $100 on a trade as risk, that is the most I can lose, but I still get the awesome benefit of massive leverage, and I have time to be right. If I use these spreads, I can trade like another trader trades, like an outright futures trader, like an outright forex or commodities traders trading, and I have time to be right. They don't. They get stopped. They're out. My stop loss is hit. Hey, I don't lose anymore, but I actually have to the end of the day to still be right, so I have a stop loss without having a stop trade. So that's our quick summary right there on where the market is at right now, and definitely suggest you stay on top of that because there's a lot of things moving and shaking right there. And we also like to go ahead and look at the news and what's going on in the news, what's making the markets move. And in diagnostic trading, we're always looking at fundamentals. We're looking at statistics like the deviation levels. We're looking at some seasonal factors. And we're also taking into account some technicals. So on the fundamental side of things, just looking at, what we had come out, late on Friday, early Saturday, Sunday, that type of thing. There's a trade balance report out of China. Their trade balance actually went positive for them, so not a big surprise, but it was greater than expected for China. And then looking on over on Saturday, what happened over the weekend there? Nothing major. There was a Bank of Japan governor. He had a little speech out there. M2 money supply came out on China. Their money supply went up from 13.6 to 14.8. And then the IMF meetings wrapped up on Saturday. Over on Sunday, we had a couple things come out. Really, the only big number that come out yesterday was the CPI over in China, and that came in at expectations at 1.9. And CPI is basically basically the change in the price of goods and services that consumers purchase. So it's sort of basically an inflationary number, and it shows that it's in line with their expectations. And then we roll on over to today, right here on Monday. And this morning, we had the core retail sales came in at 1.1%. The expectation was 0.6%. And so that obviously made the markets happy, and they decided to show it. They waited a little bit before they got real excited about it, and they showed it a little bit later in the day. That comes out by the Census Bureau. And so if you want to write that one down, that's census.gov. And you can put that right in there, and they release all their numbers and everything. You can pull the stuff off of that website. But again, that came in at 1.1, and basically, again, that's a change in the total value of sales at the retail level, not including cars or automobiles, okay? So, if you think about automobiles, they account for like 20% of retail sales. So to see it without the automobile sales and see that number go up is a very, very positive thing to see right there, coming out of the country right now. And as far as the number of 1.1, I think that's one of the highest numbers we've had for quite a while. I'm looking right now at all the history of the reports. Let's see, we had September of 2009, we had 1.1%. And then if I go a little bit later, I can see in December of 2010, we had 1.2%. And it looks like since then, we have not had that high number. So that's actually the highest number we've had since December of 2010. So that is a very bullish thing. It's a great thing to see, just retail sales picking up. And then looking on over, and we got that's a core retail sales and the retail sales, both numbers very, very high. And so again, core retail sales excludes automobiles. Retail sales is all retail sales. Okay, so the overall economic activity in both numbers, exceeding expectations, and they also revised previous retail sale numbers higher. So that's even a larger impact. They revised the last report, which is at 0.8 up to 1% on the core retail sales, and they revised the retail sales month over month from 0.9% up to 1.2%. So that's a lot of bullish news all at once. Now, the Empire State Manufacturing Index, that one also came out at 7:30 Central, 8:30 Eastern this morning, and that number came in a little worse than expected. They thought that'd be coming in at a negative 4.5. It came in at negative 6.2. And basically, what does it come from? They surveyed 200 manufacturers, and they asked them about the relative level of general business conditions, like how they feel about everything, and in New York. So it's the Empire State Manufacturing Index. And so that number, again, came in bad. You want it above zero is a good thing. And not only was it below zero, but it was worse than expected. It was not as bad as last time, however. It came in at negative 10.4. So the number did improve from the previous reported number, but the number still did not meet or exceed the expectations that they had. But nevertheless, it was better than the last report. And then looking over business inventories, that number came out at 10 o'clock Central or Eastern time. They're 9 o'clock Central. And it's basically what it is. It's the change in the value of goods held in inventory by manufacturers. And that number went down, that number went up, which is bad. So meaning they're holding more stuff in inventory versus selling it off. So it's not a great thing for the future necessarily, but it's also not a massive impact. And then the Bank of Canada has a business outlook survey. Well, they survey 100 different businesses, and they ask them to rate their, relative general business conditions, about what they're going to invest into, machinery, employment, what they think is going to happen with inflation, on down the list. That number is coming up. Let's see, a little bit later here. Should have came out already, but the number has not fully been released. So we'll see what comes out when that number finally is updated and on their roster there. And let's see here. We also got the 12:45. Let's see. That's going to come out 12:45 on the Eastern hour there. So with FOMC members Lacker, he's talking. We got the Bank of Canada governor's going to come out, and he's going to have a little speech. And that's really going to wrap up our major news for the day. New Zealand is going to have their CPI number, their core price inflation index there. They're going to have that coming up. And that'll come out, let's see, at 5:45. So if you're a New Zealand dollar trader, then there you go. And the monetary policy meeting minutes for Aussie dollar are going to be coming out at 8:30 Eastern, 7:30 Central. So that obviously can have a bit of an impact to seeing, because they lowered their rate last time. So what are they saying? Why did they lower that rate? Why did Australia, they lowered the rate on their interest for their overnight rate and everything. So it's going to be important. And that should be a mover on the Aussie dollar. Checking out what we got coming up tomorrow and what you can expect on that. And we'll come back and then we'll analyze some of the news and how it impacted the day. But right now, looking at tomorrow, we got the CPI coming out of Britain. That's going to come out at 4:30 Eastern time. And we got the German Zoo Economic Sentiment Report. That's a big number. That comes out at 5 a.m. Eastern time. And it's the level of diffusion index based on a survey of German institutional investors and their analysts. They surveyed 275 German institutional investors and analysts and asked them to respond to basically their outlook over the next 6 months for Germany. And so that will affect the euro dollar. That's the biggest, one of the biggest numbers, at least, to come out overnight. There are a whole slew of them coming out, but those are the two big ones, the CPI for Britain and the German Zoo Economic Sentiment Report coming out at 5 a.m. Eastern time. And then also, there's going to be another report come out that we don't know the time, but the Bank of England is going to release an inflation letter. And so that'll come out. Let's see here. I'll get you their website for the Bank of England's website for you up here on the screen. It's bankofengland.co.uk. So bankofengland.co.uk. And again, they're going to have that letter come out. It gives insight into the future monetary policy of Britain. And so that's just a very forward-looking, important letter. And they write an open letter to the Chancellor, and they explain what is being done to address the situation of the mandated target rate of 2% on inflation. So it's interesting that they are required to make sure there is inflation and to keep it at 2%. But it's like, remember the days, of course, none of us do because we weren't around then, but previous to the Fed and everything else, there was no inflation. The dollar stayed the same for almost 100 years. So, anyways, but you go back, look at the history on that. It's interesting. No income taxes and no inflation. Anyways, that's a whole different subject. We can do a whole show on that. We also got the core CPI coming out at 8:30 a.m. Central tomorrow, and that is going to be the change price in goods sold, excluding food and energy, which amazes me. Two of the most important things are not included in that number. Stay right there. We'll be right back after this commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour here. We're just going over all the fundamentals of the day and what's been going on and what's coming up. And we're looking at Tuesday and checking it out. We got some odd things coming out. We got the German Zoo economic report coming out. We got the Bank of England inflation letter. We got the core CPI coming out this 8:30 tomorrow morning. And so that's going to come out with a lot of stuff. And again, food and energy prices account for about a quarter of the CPI, but they are very volatile and they distort the underlying trend. Therefore, they exclude them from the core CPI number. Anyway, so most traders do pay attention to the core CPI to look at that because things like droughts can affect food and wars can affect energy. And, so it's just interesting. To me, it's just interesting because they actually look at that number to base their monetary policies on, even though the fact is, you can say whatever you want about inflation, but, mid-90s, oil was less than $1 a gallon. Gas was less than $1 a gallon. And now it's $3, $4, $5, $6 a gallon, depending upon where you live in the country. So it's 300%. And, so that's 3, 4, 5% a year, 6% a year, 7% a year. You just got to keep adding it up. It's like, oh, maybe it's higher. Well, maybe it's higher. Or maybe it's 10% a year. And so it's way above the 2%. So it's not 2%, it's not 3%, it's not 4%. It is huge. And they don't include that number. But nevertheless, as traders, you just follow along with the market and go where they go. And just try to keep up with them and try to get out of their way when they decide to go the other direction or go with them. Anyway, so that gives us our Tuesday report. Let's go ahead and check out what else we got going on for the rest of the week. And on Wednesday, we're going to have the claimant count change. So that's going to come out for Britain, and that's the change in the number of people that are claiming unemployed-related benefits. So obviously a pretty important number there. That comes out at 4:30 Eastern on Wednesday. And then the MPC meeting minutes are going to come out again. Bank of England. We have a lot of England reports coming out this week. So the Bank of England MPC meeting minutes, that's basically the interest rate votes they're reported, but also it includes their latest asset purchases and their facility votes and a lot of other information. But you can check that out on their website. And again, if you don't have that one, that's bankofengland.co.uk, and you can grab that. And again, that number is going to be coming out at 4:30. And so two big important details coming out at 4:30 on Wednesday. So giving you some pound-dollar trades if you're an early morning trader there. Looking over at, we'll have the unemployment rate also coming out at the same time. And then they'll have the zoo economic expectations. We just talked about what zoo was. That's coming out from the Frank at 5 a.m. on Wednesday. Not as big of as a thing as it is on the German one, just because Germany accounts for such a large portion of the European economy. And then going on over and looking at some other things, we're going to have our housing starts and building permits. Usually those numbers do affect copper. So that's, an area that you can look at. Of course, they also affect the market in general. And just as a general, economic, market outlook of the health of a market. And then we got crude oil inventories coming out. Almost every Wednesday you have that number coming out unless you got a holiday or something that bumps it back by a day. And then China's going to have their GDP quarter-over-year report coming out. And so that number obviously can have a heavy impact on the market. Again, that's China coming out at 10 o'clock on Wednesday, 10 o'clock Eastern time. So that's the, that's obviously the GDP is the broadest measure you can have of any economic activity. So that number will be an important number coming out on Wednesday to see if things are picking up or slowing down. And everybody's expecting that number to continue to decline. So we'll see how that comes in line with expectations. We look over at Thursday, and the EU is going to have an economic summit that's going to be happening later this week. So there's just a lot of fundamental news coming out. Of course, we've got earnings going on at the same time. So not only do you have all these U.S. health reports coming out, you got China's GDP coming out, and the EU summit's going to come out, and the number one topic, Spain. So that's expected to be the biggest topic at the EU Economic Summit, and how they're going to handle that, and basically trying to get them to do a bailout. They of course want to force them to do a bailout so they can force certain conditions on them, and we'll see how that comes out. But day one is Thursday, day two of course is Friday, and that'll be coming up at the end of the week. And on that EU Economic Summit, there'll be basically a lot of different things coming out. But they're meeting about Spain. They're going to talk about Greece. They're going to be going deeper into the banking union. And they're also going to go into further plans about the deeper economic and monetary integration that they're going to be doing in Brussels with the ECB and the EU, and putting all that together. And then 4:30 on Thursday, we're going to have the retail sales, 4:30 a.m. retail sales coming out of Britain. So just like the number we had come out this morning, they're going to be having that come out at 4:30. And then the Spanish 10-year bond auction, not really a time set, just comes out overnight. And that Spanish 10-year bond auction will be coming out of Europe. That'll obviously be a key and important number. It has been ticking lower. They expect it to be about the same. So if it ticks back higher, that is going to be an issue. Stay right there, and we'll finish up the rest of the week on the fundamentals and what to look out for in your trading.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Alrighty, welcome on back here to the Diagnostic Trading Hour here with Darrell Martin, and we're doing a wrap-up on the fundamentals for the week like we like to do at the beginning of each and every week. And again, if you have any questions, feel free to give me a call, 877-927-6648. Last, we were talking about the Spanish 10-year bond auctions coming out this Thursday. That's obviously going to be an important thing, going to be highlighted with the EU Economic Summit coming out. They're going to be, Spain and Greece are going to be the top things being discussed at that economic summit. And so that number coming in, we'll see if they've had the benefit, basically, of their bond yields going lower with all these promises by Draghi and everybody else. But as people are starting to see, there may be a little bit of an issue because they've realized that, it doesn't matter if they're going to buy unlimited bonds. It doesn't matter if there is an ECB. At the end of the day, the country still has to agree to additional sanctions, if you want to call it that. It's not, I guess, austerities. But I think you cannot do this. You cannot do that. This can't come in. This can't go out, right? So, but all the limitations. And Spain is saying, hey, we'll do our own stuff. We don't need your stuff. And, so it's helped them because they've been able to have time to be able to pull that off a little bit because all the promises help the interest rates go down. The real trick is when it spikes back up. Do they agree? How fast will they agree? And what impact will that have on the market while everybody's figuring it out? We'll be rolling over them. We'll have unemployment claims at 8:30 on Thursday. Expectation right now is that number's going to come in right around 367,000, and that would be higher than the previous week that came in at 339. We actually did have 367 2 weeks ago. And so we'll be finding out right there. Obviously, that's a big hot topic right now. And we got the Philly, it has been for a couple of years here. We got the Philly Fed Manufacturing Index. That's coming out at 10 a.m. Eastern Time on Thursday. And the Philly Fed Manufacturing Index, as the Fed goes in, they survey 250 manufacturers in the Philadelphia Federal Reserve area. And they ask them to basically rate general business conditions. So you combine all these economic reports with what's going on in the EU, with earnings, and you have just makings for a very volatile week. Looking on over here, we're checking out what do we got on Friday. On Friday, not really much coming out of the U.S. at all, except for whatever earnings reports do come out on Friday. But what we do have coming out is we're going to have, let's see, a couple things going overnight. The big thing coming out of Europe will be at 4:30. Britain just in the news like crazy with the big reports this week. Is going to have the public sector net borrowing report coming out at 4:30 a.m. Eastern Time on Friday, and that basically is where they go and they look at the difference between the spending for income versus out public corporations with the central government and the local governments during the previous month. So basically just how much is being borrowed, how much is being spent. And then looking over at Canada at 8:30 on Friday, you're going to have the core CPI number coming out of there. So again, change the price of goods sold. So a lot of these you're starting to see the pattern. They're happening over and over again in different currencies. So when they happen on those currencies, that has a big impact on them. And then in the U.S., the big number we're going to have is the existing home sales. So that's really the only number we're going to have come out. That's a big number right here directly in the U.S. And again, that's existing home sales at 10 o'clock Eastern on Friday. So that sort of wraps up our week right there. Nothing happening on Saturday and no big things happening on Sunday. This coming Sunday, New Zealand will be having a bank holiday. So, basically in observance of their Labor Day. So their Monday, our Sunday. And just a good thing to keep that in mind, always knowing when those things are going to be coming up. And then rolling around to next Monday, it'll be really quiet on the news front. So get ready for a wild news week, and just make sure you're trading with completely limited and completely defined risk. So we got a few other things going on in the market. What I like to do is I like to just sort of show you, okay, we had some reports come out this morning, and let's narrow down, let's look at those reports, let's see what you could have done with the Nadex platform and how the market just responded as a whole, and looking at it on the deviation levels as well. So going ahead and pulling this up, and you can see right here, you come in, and these numbers come, these core retail sales numbers come in, right? They come in at 7:30 Central, 8:30 Eastern Time right here. Market pops up on the numbers, pulls back down, just sort of has a bit of a choppy range, a pretty hardcore, just moving up and down pretty big right there, and then takes off. And that can be tough as a trader because you're going in and you're like, hey, the number was good, the market popped up, but then it just drug on back down. And you're sort of trying to figure out, what should you be doing as a trader with stuff like this is going on. It makes it very difficult to trade. And so, the market comes down, it basically just fills in that gap barely right there. And, just with a little bit left to go, and you can go over it. That's one of the things to always check out. Is there a gap? Did the gap get filled? Did the gap at least get close to getting filled? And so, like right here, we got the gap right there. You're talking a couple ticks away. And filled right there on the S&P. And we can go over here and we can check out the Russell. And we can see the Russell definitely filled in this gap after that little morning pop right there. Came in, got 7:30, boom, up, and then filled in the gap and then some. And then we hop on over and we look on at the NASDAQ. And on the NASDAQ right there, we can see here is the gap fill, and it came down, it filled in the gap. So even when you got good news, look for those gap fills, because that good news and that gap fill combined can sort of throw you off because you have this expectation the market's going up. And when I talk about diagnostic trading, what I'm going into is I'm saying, look at how other traders look at the market. And one of those groups of traders is gap fill traders, okay? And so they're going to be looking to fill the gap, to push the market down to that gap before the market closes down. And they usually like to do it first thing in the morning, even when there's good news, if they can get away with it, okay? So don't just look at the fundamentals, because that's what messes you up as a trader when you just look at one section. So the fundamental, okay, yeah, market should rise based on good news. Gap analysis, market should at least fill the gap, and then based on the good news, should rise back up. So you'd have a couple plays. One, you could go in and you could play a quick gap play if you want to do a quick scalp on the news. But another play is expecting that gap fill. The market starts trending in that direction. You go ahead and take the market down to that area. At that point, you look to close out. if you don't see a whole lot of strength and continuing move as soon as it fills in that gap, then you're looking for a possible reversal, especially since you have some fundamental news saying, hey, the market should go back up. And so now you're using fundamentals with your technicals. And I would put, technicals on the side of gap fills, simply because you can see on a chart, you're looking at a chart, whether it be a pattern or whether it be, an indicator or whether it be a gap or whether it be volume, all those things combined, whether it be a candlestick type, that's all under the, what I would call the technical section, because you're looking at charts to do it. Okay. So that's combining fundamentals with technicals. And then you have some other things like seasonals, and you also have, your other area that we talk about is the deviation levels. And so one of the things I like to do is I like to go through and pull those up. So I've had them up here on the screen for a little bit, but let's do a rundown on the deviations and see how that could have helped you out. So looking at NASDAQ this morning, we had a deviation move expectation of up to about 2740 on the high side and then back down to 2710. Well, it moved on up. It didn't quite get to 2740. It got to 2730. So it sort of fell short of that, but it definitely did fall back down to that 2710 deviation level, which was also a gap fill, and moved on back up. If we go on over and we can look at a couple of the others, we got the Russell, and we can check out, how high, how low has the Russell moved. Well, it moved up. We had an expectation on the Russell for it to move up to around 830.45, and we're pushing on that. We got about 826, but it's looking like it's pulling back down right now at the moment. And of course, it filled its gap, didn't go very far. It's been really a quiet day in the sense of looking at, are things breaking deviation levels? But there is a lot of implied volatility in the market right now. Why? Well, it's really simple. Implied volatility goes up when earnings come out. So, and you're going to see that. That makes options very expensive if you're trading on the equities markets. One of the things that you got to watch out for is what's called a volatility crush. And that's where people go in and they buy like options on, some company right before the earnings announcement comes out, and then the implied volatility just drops on them. And they were right. Like, they bought a call. They said, hey, I think the earnings are going to be good. The market's going to go up. The market goes up. They bought a call, but their call's value goes way down because all the air is let out of the option. The implied volatility, the expected move is let out because the move has now happened. So they don't have to price that expected move in because the move is actually there. And it can really mess you up. But it's good to know about implied volatility, how it works. And there are ways to do implied volatility if you're using them on options on stocks. One of those ways is, hey, I want to go in, if I want to do it on earnings, I want to go in like 60 days or 30 days before the earnings announcement, and I probably want to look at options that are about 30 days that expire after the news announcement. So otherwise you're going to get nailed on that implied volatility crush. And then looking over here at the S&P, we have an expectation of a move up to about 1436. We've moved up to about 1434 right now. And so just a couple points away from that first standard, not standard, but implied deviation move, the diagnostic deviation level. And then looking over at the Dow. So what we expect on the Dow, like we talked about that a little bit earlier, it's up to 13,362, 363 right now. And we're looking at a movement to 13,370. So it came right to the deviation. I mean, within a few ticks. And don't get caught up within like a point, okay? Don't get all like, oh, it's it's not exactly to the tick or to the point. Now, you'd be surprised how many days and that we do call these out. I mean, they are to the tick. But, if it's getting really close to a deviation level, start looking at tightening your stops, okay? So it's just a wise thing to do. Now, definitely be serious about tightening when it hits a half and when it hits, 0.7. And definitely when it hits a 1 deviation level, and you're looking at volume. Now, is it climbing in and through that level with volume? If it is, well, then that's great. And you can see, we had some nice volume surge right here going into it. But at the same time, it got really close, and it's starting to back off. And so that could make you a little nervous. But you definitely want to have a stop right here around 13,327, 13,336, maybe even higher, and already stopped out of him on how tight you want that stop to be. But we have had some good volume moves this morning so far. But eventually they do like to run out. But if you can ride it, just keep it back a little bit. And, one of the, if you're using regular bars, I like to use a unique type of Renko bar. If you're using regular bars, you can go over and look at 10-minute bars, and that'll help you see it a little bit more clearly. And you can sort of see that volume surge each time it's breaking out and making some new highs on the day right there. Now, going on over, we'll check out some of these big market movers. You got copper has been just a little bit crazy today. And you can see right here, this thing goes in. I mean, it literally bucks all the way down to 3.646. I mean, it's a crazy move on copper. And that is right down to a half deviation. 3.647 was literally our half deviation marker right here, and it hit that and it bounced literally just right off of it, went back, filled in that gap, and then started to head back down, and got a little choppy afterwards. But overnight it literally went right to the half deviation marker. And then going on over and looking at gold. Gold's been moved early this morning right out of the gate there. We got a big move. And checking that out, backing up a little bit. And let's see here. Show you exactly where we were at and where we were expecting gold to move down to. We expected to move down to about 1742, then on down to 1736, and then a full deviation being down to 1725. So if you were looking at that and you're using gold and you're going short there, then whenever it broke the 1742 level, so you'd be tightening that stop up, so like right about here, and you see it hits that, and then all of a sudden you tighten your stop at the close of the next bar, and then what does it do? It goes ahead and decides to move down even further, moves on down to 1736 and hits that, so you're keeping your stop very tight, and it moves down even further. You got a little bit of volume there, but not as much volume as you had on this last breakdown, so you tighten your stop again, and you're expected now to move down to 1725. You're keeping your stop tight on each bar. It does not make the move to 1725. It hits 1729. It bounces back up, and you're able to capture, a solid, 10 points or so on gold. If you were able to take, say, an entry right here off of the pullback and reversal there, and then, just basically tighten your stops along the way with the clue of, hey, it's time to start tightening stops when it's hitting the deviation levels. And then we go on over, and we're checking out silver. Now, on silver, what do we got going on in here? We'll check out silver, and we can see that we had an expectation on silver to move. We had a pretty big deviation move right there with 32. It's like 80 at 9. And that's the half deviation, then down to 32.66, and then on down for a full deviation. Let me see here. We got 32.31. So as it hit each one, it sort of looks almost exactly like gold, right? So you moved it down, boom, first one, moved it down again, hit the second one, kept moving it down, working on hitting that full deviation move. Didn't quite hit it, but you captured the move because you kept moving your stops down. And then looking on over and looking at natural gas just flying all around. I mean, it's had some days lately that's just been insane. And we're seeing natural gas right here, and it had a deviation move. Let's see, it moved all the way down to 3.447. And first move expectation was moved down to 3.477. Well, it definitely hit that, like literally. I mean, the market opened, boom, hit it immediately. And so you start tightening stops down, and let's see, 3.477 right here. And so that's where you're starting to look to tighten up your stops. And if you would have tightened them at any point around there, you would have been a happy camper if you would have caught that short. And it would have a little bit lower, went down to 3.420, would have been the next deviation move. And because it hit the 3.516, then the 3.477. Did not quite hit the 3.420. So just a little bit between a 0.7 and a 1 deviation. But you could have easily got stopped out at here, or depending upon where your stop is, maybe right around here. But either one of these levels would have been a great move on natural gas to capture today. So that's your deviation levels working with you on top of everything else. And then oil. Oil's been sort of bouncing around today. So it flew down, flew on back up. And we can see oil moved on down to 89 point, looks like about 78, 89.80 right there. And we were expecting to move down to 89.93. So we did break that level, that 93 right there, 89.93. As soon as we broke that, hey, time to tighten stops. And that's a perfect tighten stop area, and it flew around and went back in the other direction. So perfect area to tighten your stops. Well, stay right there. We'll be right back after this commercial break to be wrapping up the week and looking at a couple of the others for you before we wrap up the day.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here. Let's wrap up the rest of the markets for the day. It looks like corn right now has been moving on down. It's down 2.26 right now % on the day. Just a big, big mover, only being overshadowed by silver's massive drop. And on corn, what we got for our expectation on our deviations right here, we can see we've expected to move down on the corn futures to go on down to 752, and then down on to 741, and then on down to 736, and then on down to 729. So let's check out how we're doing on that. Well, right now we're at 736, and we can see that 741 was that half deviation move, 752 being the close of last week there, and then down to 736, we definitely hit that, and then 729 have not quite hit the 729, but at the 736, we're at a 0.7 deviation level, and that happened right here in this bar. That's where we're tightening our stop, right at 737.69, or let's see, maybe a little bit higher there. The high 739.26, actually a little bit lower. So tightening that stop down, and then moving it down again at the close of this bar here to 735.6, and just keep trailing that down. But as far again as we expect it to move right now is about 729.57. And it would be one of the first day of the full deviation on the day. So we remember, our deviations are different than standard deviations. Our deviations are about implied deviations. What does the market expect? Not what do we expect, not what some mathematical formula from the past expect, but what does the implied volatility and the underlying options with all the market participants participating at the exact same time, what do they say on how far the market's going to move? And we take that implied volatility number out and we actually take the number out of several months, several options, and then we plug that into our deviation formula. And looking over here, we got the soybeans. On the soybeans, massive move. You just see this drop right after, or right open on the close here, or open on Sunday, and it just has continued that move on down. It moved all the way down to 1486.75 on the soybeans, and our expectation was down to about 1479 would be a full deviation, but 0.7 was 1492.41. So if you were in that trade, then that's great. You probably would have been tightening up at this point, and you'd be done. You'd probably be stopped out of the trade by now. So I probably wouldn't have got back in that trade after it went down and made that pull back up. Even just looking at this volume and everything else, just not real excited about hopping back in again on soybeans. But it made a massive, massive move. And then looking on over, we can look at some of our currency pairs. So for our Aussie dollar traders, what do we got going on? Well, the Aussie dollar's moved all the way up to around a high of about, let's see, what do we got? Make sure we're including even the overnights there. And we do have a high of 1.0258. And we're looking for a move at, really, that's nothing. That's not even registering. So Aussie dollar basically just staying flat. You can see there the gap, boom, down, up, just a lot of oscillation. No major news to write home about there on the Aussie. Looking on over at our euro dollar, basically doing the same thing. We moved down, though, to about 1.2889 there. And that would have been a move almost to a half deviation, 1.2882. So it did actually make a decent move, made a run for the half deviation. Couldn't quite hit it, just, you're talking like 7 pips off. Bounced on back up, filled in that entire deviation move, and basically made an entire half deviation move all the way back up, and then fell back right off of that. So how these currencies end up today, really, I think we're going to be looking at the market as a whole to see how it all comes together. And then we got the pound dollar. Pound dollar's been down, up. And so sort of hoping for a down. We'll see what happens on that. But 1.6019, we got the pound dollar. Checking that out, 1.6011. So again, 8 ticks off the half deviation. Didn't quite hit it. Bounced off of it. Moved on back up. Filled in the close from Friday. And fell off that. Filled it in again. Fell off of it again. So it really hasn't had the strength to really break out any new highs from last Friday's close. Anyways, y'all stay right there. We got a great show coming up for you right after this break, and I will see you tomorrow from 12 to 1 Central, 1 to 2 Eastern Time.